Testing, testing, 1, 2, 3. Good night, everybody. My name is Stephen Morgan, I'm a currency trader. Testing, testing. We're gonna look at some currency pair, some risk on, risk off scenario. Just setting up. Giving me a second right here. I'm just good night, good night. Good night. Spence, Andre. Check, check, check. And everyone is hearing me. Just making a check. Just giving the time so the others to come in. Yeah. Just giving the guys and girls a few more minutes to check in. And it might be 5, maybe 10 minutes login to login. So possible when you guys maybe type your questions, I might take a while before I see it, right? So yeah. And I will personally appreciate the questions. Okay, alright, let's get it down. Let's go on dollar CAD. And I'm gonna go on. This is the USC currency straight across the board. This is how I have it. I have 6 different USD pair, and I normally have 6 different dollar pair, 6 different Swiss franc pair straight across the board, right? Because for me personally, my style of trading is a risk on and risk off. And basically, if we are in a risk off scenario, that means we have 3 major currencies that tend to get strong, or the demand for those particular currencies tend to gain some strength, right? So we have the Swiss franc, the yen, and the US dollar, right? So everything else, most likely, everything else is normally weak against. Meanwhile, they are strong, but some might be weaker than some, and some might be a little bit stronger than some. But if you're trading extremely weak against extremely strong, you're going to get quite a few pips, right? And we can use, as we see in our charts right now, right? The dollar yen, based on the structure, are the or we would say the distance of where the come on, all right, the distance from here to here, right? We can determine the straight distance from here to here, from this recent swing high, you know, falling from here to here, from here to here, from here to here, right? So based on these three arrows that we have, six arrows where we have right here, we can definitely see the the euro against the dollar is not moving well. The euro is gaining a little bit, have a little more strength than the CAD, the Kiwi, the Aussie, the pound, and even the yen, right? So this is how I do a relative strength exercise to get into the market, right? So I'm going to go on the pound yen, and this is the daily, this is the weekly and the monthly pivot, right? The small lines is the weekly, and the thicker lines are the monthly. Alright? So basically you do your analysis and you decide whether you're a bear or a bull, right? But then you use tactics and get in. As in tactics are in entering or exit the trade. The exit is just as important as in the entry. So you get the most out of the trade. Right? So oftentimes I drill down into a daily pivot point and a daily setup, and I enter normally in the New York session, sorry, in the Asian session or the London session, based on the setup, right? But first, I know what I want to do before I attend to my chart. Before I open the charts, I know what I want to do. I know if I want to buy, I know if I want to sell, right? But the problem is the different variation of setups, right? I'm not trying to trade every move in the market, right? I'm just trying to pick the best one that fit my trading strategy or my trading style, right? Buy high, sell high, buy low, right? So I have a 3-hour candle, I have a 3-hour window that I mostly use for setting up, and I'm gonna show you guys right now. I'm gonna switch to the daily time frame, daily pivot, and I'm gonna drill down into a 50-minute time frame. Right? Gonna drill down into a 15-minute time frame. So during this 15-minute time frame, I have 12 candle window, right? So the 12 candle is 1 hour before the market open, as in pre-market, right? 1 hour. So each session, right? Because we have Asia, we have London, and we have New York, right? So each session they have their own equity market, right? They have their own equity market. So with that being said, the institution or the market maker try to use that window to set up the trade, or to that window to be the actual trade, right? So with that being said, the time is 8 to 11, and this is New York Eastern Standard Time, New York, right? So I'm here in Jamaica right now. The time is 8, right? The time is 8. So the time is 8, so it should be 7, right? Because we have a different 1 hour difference, right? So that's why I just use, depends on where you're located, where you're located across the world. You know, you set up your own, the MT4 of different time span, depends on where you're located across the globe. But the 8, find out what time 8 o'clock at New York, and match it up with your time, what time that would be in the morning or in the evening or in the night, or you know, yeah, cause like now it's morning in Asia and it's night for us right here. Cool. So with that being said, style of trading, right? I mark off the high and the low of the day and the high and the low of a session, right? The high and the low of the day and the high and the low of a session, right? So oftentimes the window that presents itself is either a stop hunt or is the actual trade, right? So the goal session we have right here is the Asian session, and I'll just highlight it for you, right? This is the Asian session, this is the London session, and this is the New York session in green, right? So oftentimes the first hour, like the pre-market open, is normally a trap. Forget traders going in the wrong direction to trap traders, so the market maker can pull the market away from them, right? And he keep hitting the stops, right? So that is the ideal situation, right? And we are talking about, most traders ask how you enter the market, like how you wait for the setups, what signal you look for to enter the candle and enter the market. You can use that candlestick formation. You can enter either on an engulfing candle, you can enter on a pin bar, even an inside bar, right? Candlestick formation. You can even enter at those, right? But you are going to choose certain amount of pattern or candlestick formation that you look for, and you'd enter on that, right? So I wouldn't say you would like to enter on everything, right? So I'm going to drill down to the most recent day, which is the 11th, right? Because we are already in the 12th. We are still in the 11th of June, right? But the trading day already begins in Asia. So right now the trading day is in the 12th of June, right here. 12th of June, right? Right here, right? So I'm gonna blow up my chart a little bit so you guys can see just a simple formation and how to really enter the trade, because that is the most time where traders, many newbies, get caught up, right? Cannot squeeze the trigger and to enter the trade. So I'm just going to increase the candles. Right, I'm just going to increase the candles and show you alright. Can increase it a little bit more. Maybe this is too big. On the bottom line, I want you guys to really see what's going on, right? So we have now in the market, we are just gonna, alright, come on, right. Now we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, right? So on the 12th candle, you can looking for a engulfing pattern to one side, right? So for example, this we have two entries. We have two entries. Remember, you already identify what you want to be. You want to be a bear, so you want to sell. So you're looking for the market to push up high, and you want to sell in that high situation. You don't want to be selling at a low situation. You're trying to get the best price possible high, right? So we had a push up right here, right? And we could take this red candle right here, right? Pop your stop above and wait. And also, let us erase this. And this is second trade. This, if you don't comfortable with that technique, you can see we add a consolidation right here. We could take the shift candle, right, which I call it shift candle, because after a consolidation and then move, right, it don't normally go back to the previous area that the price already leave, right? So we also could take the shift candle right here, right, and you get pop your stop above, and you have all of these pips right here to attend to. So with this entry, with this style of techniques, it eases a lot of stress off you, right? It tells us instead of being at your charts for several hours, just try and be at your charts for either 3 or even say 4 hours at each session. New York session, try to be at chart like 1 hour before the 3 hour window that I just mentioned earlier on, right? So you can even set up your charts and look and see which is the best asset you want to take, right? So for example, the 8 to 11, you try to bet your chart like at 7, right? So you can mark up the high and the low of the day, mark up the high and the low of the previous session, right? And set up your trade 1 hour before, right? So you come prepared. After that, now you use the 3 hour window to enter the trade, right? If you don't see a situation set up, don't take it. If you don't see a situation that prove itself to you, that suit your strategy or your techniques of entering the trade, there's just no trade. It's either you pack up with whatever, go do something else and wait until say the following session would be the London session, and you will try come 1 hour before so you can mark up your charts and see how it behave, how it act, or what price have done over the past few hours, right? So this is the first entry right here, right? This is the first entry right here, one entry. It come all the way down, and it doing the put a L right here. Doing the London session, we have a little up consolidation and just crawl it way go up, right? So when it crawl it way go up now, we just look left and drag this across, right? Drag this across right here. So it just crawl go up, back up to resistance or back up to a previous swing, and we have this candle right here, right? This pin, like this pin bar right here. So this is a signal for me, right? So I personally sell this, right? Boom. First target the previous low. First target the previous low, or as it breaks the low, I will just take profit if I'm a session trade, if I'm an intraday trade. So the problem is, right? The problem is where you see this candle formation, is where you see this candle. Because if you look, you're going to see pin bar in the middle of you're going to see a bar, a hammer, right? Like see a hammer here, where you see the hammer, you see the hammer, but it's where you see certain candlestick formation. That is what important, where you see the candlestick formation. That is important, right? So up, you can see this in the New York session right here. I'm gonna put a NY, right? And we have this huge greed candle, right? So half the time them use the engulfing candle for traders to chase price, right? To chase price. Half the time that's what they do. So obviously after these 3 huge candle up in this window right here, we see a little thing like this, like a cross or so. And after the indecision candle, you get a follow-up, which is this red candle right here, right? Obviously, the cross would be a better price to enter, right? The cross would be a better price to enter, right? But you could also take the shift candle right here that I always mention, and you have enter the trade right here and pop your stop above. So with these techniques and these small window that we look for, it helps you to narrow down our trades. And normally, when I enter a trade, and this is part of my technique, If I enter a trade, I give it 1 hour. If I enter a trade and I'm still in it 1 hour and it don't move, either I take a small loss or it might be a small profit. I just cut it. That simply means maybe just a consolidation session. It's not a trading session, right? Probably cut it, and in the following session I look for the setup, right? Because you'd have, for example, you'd have 2 session consolidate. You'd have Asia consolidate, London consolidation, and then New York, boom, the trade take off, right? And sometimes you have Asia gear trade, London gear trade, and New York consolidate, right? But half the times I look on the previous day to see what's going on. I look on the previous day. I'm gonna increase my charts, increase the candlestick, so you guys can get a clear understanding of what's going on. Alright. Alright. I'm going to start right here. Right? We have, what I said, it's a consolidation right here. Small move. We could also trade in this leg. And we have a consolidation. And we have a consolidation. Right? 3 session don't move much. Right? 3 session don't move much. Alright. This is the next playbook again. Right? This is the textbook playbook. 1, 2 up. Right? Asian down. Right? London down. Right? New York up. Right? Watch this. So next day we have Asia consolidate. London went up and still come back down, and New York went up. Right? So with that being said, if I don't see it move in one session, I just scrap it and I come back and I go to and use the other session. Right? Because one of our, see, like what I mentioned earlier, our 3 session just give you no movement. Okay. We'll come back to the charts next day. Right? Similar right here. Asian down. Nothing much. Right? Nothing much. But at the end of the session, alright, I'm going to elaborate a little more on this session right here. I'm going to change the color to blue. I'm going to change the color to blue right here. This London box right here, right? They consolidate and chop traders right in here, right? Consolidate and chop traders right in here, right? Within the same 3 hours that what I'm telling you about. Now, if after the 3 hour end, and I see a setup and I see this engulfing candle right here, right? Because I see the consolidation, I'm already a bear and I want to sell. I'm allowing this to sell. I'll rather it come high and then I sell. But wait though, what the market tend to do, it consolidate, frustrate you, right? And then boom, one engulfing candle. Now if I took this engulfing candle right here and I pop my stop above there, if this trade don't move within 1 hour, I scrap it. And this is like just 50 pips. I'm just gonna write 50 pips. Minimum. My target normally when I took this trade, especially this pound pair I try to target minimum 50 pips, right? And in this case, I would definitely take my profit because the market hasn't rolled over yet, right? The market hasn't rolled over yet, right? We are still in an uptrend, right? Technically, the market don't roll over yet. So with this case, you just take your profit, right? You allow the market to set up for a rollover if you want to hold it for a longer term, right? So I'm just going through the different variation, right? I'm going to understand, right? Come back. Alright, must we understand the different variations. Here is where it was. We have London, sorry, New Asia, basically sideways. I could say this come down, right? London come down, New York come up. Asia come down, London came down, New York up, right? You see the similar? 1 2 down, 3 up. 1 2 down, 3 up, right? So that's why I like to look left and see what's setting up, right? And also I would identify my swing eye. This was the eye of the day, right? And this was the low of the day, right? So if I want to buy, I have to if I want to buy, I would buy at the low of the day, right? And the low of the previous day, which is right here, the low, which is right here. If I wanted to sell, I would sell at the high, as it somewhere around here in the new day, because this is the high of the day, right? Up, one green candle up, chop traders think it's going up, and then just boom, boom, boom. So it's clear the high of the day, previous day, and it come back and take out the low of the previous day. Sorry about that. Right? So there we have it. So in this session right now, following day, one session up, and the next session up. Right? So this is like a 3 push. 1 2 3. Right? And you know, I think was the J Powell. This was some speech going on right here. The Fed was, I don't know what he said, right? Cause I wasn't available to watch his speech. But bottom line, after that, he said, I don't know what he said, but besides that, the market set up to take profit. Cause it was being up all along. And on my weekly pivot, this is also a profit area, right? So boom, you see the spike down, stop on the low, went high, right? And then follow through. Cool. So the setup for a sell zone, right? So it break down, Asian session, pull up, right? Set up the trade, then it went down, right? Draw the low of the session, boom, went up, session set it up, at the end of the trade window what I was talking about, and it just boom, give you the signal and you also sell. But my target would be like the swing low, right? And even the swing low right down here, right? So when you look left, it tends to set up target for you. Time frame. This is the 50-minute time frame, right? It's the 50-minute time frame. Cool. So basically that is how I really set up my trade. I try to simplify it, right? The more you can simplify the trading, the better it is for you, right? And it's just this is just one chart that I look at right here, is the pound dollar. But half the times, I don't look at my chart like this. I look at the all-time frame at the same time, right? So I don't just talk on a 50-minute time frame chart, right? I see a question maybe a bit late, but yeah. How I set it up like that is pound dollar similar like this, right? So I have the daily, I have my 4 hour, right? At H4, right? I have my H4 right there, right? And I have my problem. This supposed to be a hour. I don't know what happened right there, right? This would be my H1, right? And this would be my D for daily, and this would be my M15, right? This would be my M15. Cool. Right? So we understand. So I normally take the rollover. When I enter a trade, I like to enter like the beginning of a 4 hour, right? The beginning of a 4 hour, or the last 15 minutes in the 4 hour, or the last 15 minutes after, like a rollover, right? I like to take it at a rollover. And at the same time, I'm looking at my hour, the time frame, to time it, right? And I'm looking at my daily time frame to help me with the timing, because the timing of the trade is very, very important, and that is where many traders tend to struggle with. Even if you analyze your chart, right? You analyze your chart and all of that, but the problem is when it's time for you to enter, that is where the problem is. How you enter, you have the tactics, how to enter. You enter late, or you chase price and then it pull back, stop you out, then go, in the direction first, and you're saying to yourself, why did that? Why, it couldn't wait and go go up first before you sell. Yeah, you sell it. But because you don't focus on the timing, right? The timing and things like that. So when I said the 3 hour window now, it give you that you can set up yourself. I don't know whatever you're doing or busy it is, you can set up yourself and say, hey, 3 hour I'm going to sit at my computer and looking for this setup. I need to see a pullback into some structure before, right? And this window right here, the 8 to 11 or the 2 to 5, right, in this session is where it tend to happen, and we have it right here. We have it right here as an example, showing you all right here. See it up, see the pullback in the session, in the 3 hour window, it went down, and the 3 hour window set it up again. It went down, the 3 hour window set it up again. So you look for this ideal session to take the entry, right? So just take one or two tactics to enter. Don't take everything. Just take one or two. Specialize, right? Specialize. It's not every day I come to my charts, I trade. Sometimes one whole week I don't see the setup and I don't see the trade, right? Just make it count, right? Just make it count. So anyone have any more questions on the timing or the tactics that I use? I'll be happy to answer the questions as we go along. And remember, say it kinda this, we have a little lag, 30 seconds, maybe 2 minutes lag, right? So yeah, this is what we this is my style and my tactics of trading. Alright. One other thing. Now I use fundamentals first and technical analysis after, right? So I do my research, right? I try to come up with my own opinion whether I'm gonna buy or sell, right? When. And when I say buy and sell, I don't just mean like one day, right? I mean like a buyer's feel a week or a month, right? For example, I was a bull all along, bull, all on the safe events. Why? Because as simple as the Fed. The Fed, I do whatever it takes to prop up the economy, right? So if you come to that conclusion, what is going to happen? I'm going to put all this money in the economy. All you basically have to do is just get some of the free money. Just buy, right? Just buy. So with all these things that is happening, right? And remember this now. Things take place in the economy first before it goes into the public, right? It happens on the charts first, right? We're looking stock market, people not going to work and things like that, but yet still stock going up. Why? Right? No people going back to work, stock market already up. So yeah, what are you gonna do now? You're gonna come and buy now because people going to work? You're already late, right? We as currency trader or trade overall, we try to predict the future, We try to predict the future. Where is the next price? Where is the next price gonna be? Where is the next price? Right? So we buy now and we sell after. I use investing.com and I also use trading economics, right? Because I also study economics, right? Um, Definitely. If I don't see 2 to 1 risk to reward ratio, right? I don't even like 1 to 1, but I will take it from time to time, right? But that is not my. I like 2 to 1 or more, right? 2 to 1 or more. And half the times with this setup that I'm showing you, right? Or I use it. Sometimes I get like a 5 to 1, cause sometimes I would have like a 10 pip stop or a 15 pip stop, right? And I'm allow the trade to run, and we get like 80 pips, right? 80 pips. Sometimes 100, sometimes 120. It depends, right? Even this thing that I show you, as I take the trade, we didn't want to know what it move up. And a 1 bar stop might be, let's say, alright, this pin bar right here. A 1 bar stop, 16 pips, right? A 1 bar stop would be 16 pips, and I would just, this would be what? 60 pips. I would get 60 pips. So I would get 16 pips, 15 pips, and I would get target as it break the previous low right here. As it break the previous low, I would just take my profit, and that would be like, so I get, so you understand? That is like a 4 to 1 right there. And then, so that is how I put the odds in my favor. So in case I have a couple strings of 15, 20 pip or 25 pip losses, my winnings outweigh my losses, right? So that is the tactics. All right. All right. Yeah, of course, I use trend lines. I use trend lines, but I don't really use them often because, for example, I could draw a trend line right here. I could draw a trend line, say, right here, and wait till price pull back up to this area right here. Wait till price pull back up there, and then for a continuation move, sell. I could use trend line, but I don't really base my trade on that. You know, I use it, but I don't really use it that often. That necessary. I'm just trying to get in the structure, right? The structure, the structure of the market. For example, now it come down, it come down, change the color. We were taught touch, sell, sell, sell. And at the time when you see it pull back up to this now and you press sell, that is the time where it don't work out. And then now you say trend line don't work and whatever, right? But with this extended move, right? With this extended move, based on my trade analysis, I'm looking for some deeper pullback, right? For me to get into the market because the market maker don't like to leave money on the table, right? The market maker don't like to leave money on the table. So I will draw a fib. I'll draw a fib on this right here. Come on, hold on. This is my 4 hour. 4 hour. This now I'll draw a fib right here. Right? Boom. So me personally, if when it come up, I would try to get involved right here. 382. Because if the trend is very aggressive, we get a pullback at the 382, right? And we understand that all who take the breakout right here and them don't take the money off the table, right? The market can come back to the next swing. So I like enter where the swing high or swing low is of the market, is where the market is at. And the second entry would be maybe all the way up to 50% that we have right here, 50%. right? So me personally, I wouldn't buy this small pullback, right? This small pullback, sit on the daily right here. I would prefer a bigger move than a come down, right? That's just the tactics of our I understand. Cause you say you miss it here, you miss it here, you miss it here. So what you're doing, you're chasing price. So this small pullback now, you enter, and as you enter, where you go put your stop? You go put your stop right here, stop right here, stop right here, stop right here. And where your stop is placed, that is where I want to enter the trade. Because I understand. So, sorry about that. I enter at a, yeah, I would rather a deeper pullback before I enter the trade, because newer trader who miss the opportunity will be chasing price, and I know they will be chasing price, and I have an idea where they will likely put their stops, right? Remember, 95% of the business of in this industry, traders fail. So question is, you have to figure out what the 95% are doing. If you know what the 95% are doing, you can know, say, all right, this is what I'm not going to do, right? Um, and pivot point is just a support and resistance of the market, basically, right? And it also a leading indicator, because it also tell you tomorrow price to enter, to where price might be to sell. A leading indicator, not a lagging indicator, right? So that is really why I use the pivot points. Uh, so, and I didn't get to explain the risk on and risk off scenario, right? Of course, counter trend. If you're skilled enough, if you have the skill and what it takes, you can counter trend, right? If you have the skill and have what it takes, you can definitely counter trend. But me personally, I'm just really against it. But if I see a properly set up, I'll just take it, because I'm here to make pips, right? I'm not here to be right or wrong. Bottom line, pips. Pips you're making, right? So it's not about, I'm not about of me being right or you being wrong, right? You can be a buyer and me can be a seller, and we're both making pips, up and down, right? So hope that would answer your question. Yeah, you can definitely trade. Because you have counter trend trader. That is why it go up. Because people bought in the market and it go up. Right? People bought in the market and it go up. And it's counter trend trader do that. Right? So alright. Next question. The risk off and the risk off scenario, right? Can be a number of things, right? When there's uncertainty in the market, right? When there's uncertainty in the market, well, I say a risk off scenario, right? A risk off. For example, the coronavirus, COVID-19, is uncertain, right? So when the market players them uncertain, they tend to buy up, put their money into these safe havens asset, right? Dollar, um, Swiss franc, or yen, because chances are these are some big economy, and chances are for you to get back your money is highly likely. In other words, right? You put your money into if you have a whole heap of JMD, right? You'll have feel safer put your money in the one of these asset, right? And also big investor, like, because these currencies are funding currency. They fund smaller economy, like I would say emerging economy, right? Emerging economy, right? So when uncertainty is best, they keep their money in their country or in their own currency, right? So that is how we angle risk off and risk off scenario, right? So I'm gonna give you a next example about the risk on scenario now, right? Risk on scenario. The risk on scenario is this: you're willing to take the risk, right? Just like how we're willing to um, the Fed give you the assurance that he will not let these the economy go down, and things like that, and you do whatever it takes So you get the confidence now, say, alright, as an investor, I have the Fed behind me. Okay, me can invest into these emerging country and the economy because of the Feds backing me. Right? So that create the risk on now. Right? You're willing to take the risk because you feel more certain. Right? You feel more certain about the economy, about whatever it may be, you feel more certain. Right? So it's basically certainty and uncertainty. That is basically it. Right? We are risk on and risk off scenario. You have some other little details where we can go in about that. It's like a training course, you know? Yeah. I go down into some details so you could know in advance to buy or to sell. Right? Yeah. So I'm gonna call it a night right here. And thanks for attending. And please like and share and subscribe and have a wonderful night.